COSIMO we're a relatively new VC. We're based in Boston and New York in the US. I'm based on this side of the Atlantic, so I front up the Irish operation. So we're about 3 years old, and we do seed level investment into deep tech companies. So deep tech for us is AI, blockchain, AR, cyber, IoT. Novalea, who won the Startup of the Year award again 2 weeks ago, is one of our portfolio companies. So we invest seed level money. We're very, very operational type VC. We're very, very hands-on. Some companies like that, some don't. But for those who do, there's a potential fit. Seed for us is anything up to $1 million. So, we can go usually anywhere from about 200, 250 up to $1 million is typically our sweet spot. So for many of the attendees today, there are a lot of startups knocking around, lots of investors knocking around, and I think by and large everybody's looking at, certainly amongst that group, is looking at the same challenge across from a different perspective. Funding is an ongoing challenge for startups. On the other hand, investors, be they angels or professional investors, they're looking at what sectors do I invest in, how many companies do I need in my portfolio, etc. So everybody's coming at the same issue from a different perspective. But one thing everybody is looking for and trying to understand is what is the return. In terms of what's happening in the market, and I suppose specifically in the seed market, it's always dangerous to generalize, but if we look internationally at the sort of output that's generated by the likes of CB Insights, PitchBook, Crunchbase, people who produce reports on the venture capital market and on the investment market, the headlines would suggest that there's more and more money, the so-called wall of money, being thrown at companies. But when you lift the lid on it and get in under the skin of the numbers, you do get a slightly different perspective. It would appear that yes, there's a lot more money being spent, but it's being spent on fewer deals. Yes, there's a lot more money being spent, but less of it is going to seed, because a lot of the people who are invested or who are investing are migrating more towards latter stage deals, Series A, B, C, etc. So what we see internationally is seed level and early stage investment getting squeezed. And I think if you talk to any of the startups, certainly in the Irish community, I think that would be a familiar theme for them. And securing that first investment is very, very challenging. However, over the last 2 years, we have seen a new paradigm emerge. We've been involved in blockchain for a number of years. In fact, one of our very first projects was a blockchain company. And over the last couple of years, many blockchain companies have basically changed the agenda. Instead of going for seed investment and the traditional route, they are now going the ICO route. Now, ICOs, by their very, over the last couple of years, we've all seen the headlines of, scam artists and people getting burnt and wallets being hacked, etc. Nevertheless, the whole ICO thing is here, and it's here to stay. It's a relatively immature market, but if we look at blockchain companies as an entity and the amount of investment that's gone into them. So let's just take 2017 there. About half of the funding that went into blockchain companies was seed level investment provided by early stage investors such as ourselves. But last year, almost a quarter of the investment that went into blockchain companies came through ICOs. Now, I don't know how up to speed the audience is on ICOs, but an initial coin offering, the founders issue tokens, which investors can buy and in some cases use in the project that is being funded. So, ICOs last year, when it got to Q4, the amount of money being raised by blockchain companies through ICOs actually outstripped venture capital investment and traditional investment at seed level in Q4 last year. So yes, yes, the sector is challenged. The ICO market is challenged in terms of, it's an evolving market. It is maturing, albeit relatively slowly. But for us, we've been involved in blockchain and more latterly in ICOs. This was a real wake-up call for us. It basically means that venture funding is being challenged. ICOs are challenging the venture funding model. That is very, very clear. The other thing that is really, really striking is how quickly the market is evolving. It's gone from a very, very unregulated approach over 2016, 2017, coming into this year into a much more structured, much more organized investment opportunity. So, if we look at blockchain companies and what they have been doing and why they have been doing it. So, if you issue tokens instead of raising seed capital, one, you're not diluting yourself. You still own the same percentage of your company that you own. You're just raising money through a token issuance mechanism. You can now target a bigger pool of global investors. You're not just shopping around with the usual suspects. The cost of doing it is significantly cheaper. From an investor's perspective, it introduces many new investors into angel investing or into investing in early stage companies. But the market is not without its problems. There have been issues around governance in particular and projects that haven't been very well thought through. On the other extreme, there are those that have been extremely successful and have done very, very well. In terms of how it is evolving, and as people more experienced than me have described what's happening in blockchain and ICOs as something akin to when the internet first came on and when .com really started rolling. The market is evolving. Some countries are embracing the opportunity that blockchain brings and have even gone further and are starting to embrace the ICO approach, the initial coin offering approach. Switzerland, for example, in the last few months has issued some rulings on it. They've basically broken token offers down into three groups. Digital currencies, I suppose the most famous would be Bitcoin, but there are many others out there. Utility tokens, and thirdly, securities. As a company that invests in blockchain companies, ironically, we have a project underway in each of those three sectors. We invested $3 million into a company called Onero earlier this year, in fact, late last year, earlier this year. Onero was put together by a group in the US, but primarily in the US, of about a collective of about 15, 16 people who had been in and out of cryptocurrencies and identified the 23 fundamental issues with cryptocurrencies. The top three being governance, stability, and dependability. They have now designed and built a product that addresses those 23 flaws, and that product will be coming on stream over the next few months. When it comes to utility tokens, we invested $1 million into an Irish company called Gecko Governance. So Gecko Governance is a platform for hedge funds and large financial institutions. It has a strong blockchain element to it. And we put our money in, helped Gecko build out their plans and deliver on those plans, and it came time for the next step up into Series A funding. Gecko's plans included extending their platform to cover governance and compliance for ICOs. The logical thing to do was to launch an ICO for Gecko to deliver on that product. So that ICO has just started, literally in the last couple of weeks. It was announced at Consensus in New York a couple of weeks ago, and it has been very warmly met, not just by investors, but also by regulators who are grasping basically at anything that can help them come to grips with regulation in this industry. I'll come on to talk about COSIMO X in a second, but we have learned a lot around blockchain and indeed around ICOs over the course of the last year when we've been really, really immersed in the ICO journey. What we have learned is, and the approach we adopt is, we take the high moral ground on absolutely everything, be it regulation, legals, etc. Lots of people go into ICOs and cut corners. If there's a long corner to be found, that's what we have done. We have put a lot of money and a lot of blood, sweat, and tears behind that approach. And you know, Switzerland came out with their definition of tokens. There are three different levels or three different types. If you look at the SEC in the US, they see pretty much everything as a security token, which brings a whole other layer of complexity and compliance. And the SEC are still, you know, evolving their approach to it. But, you know, if we learn anything from history, it's where the SEC goes, others will go. So again, in rolling out the ICOs that we're involved in, we're assuming everything will ultimately be a security, and we are following the SEC guidelines in that respect. Okay, so taking all that back then to our own business, venture capital, what does that mean? So if you look at, you know, the venture capital model hasn't changed in like forever. Venture capital companies typically bring funding. They typically have a very robust screening process and you know, a thorough due diligence approach. They bring a diversified portfolio of companies into play. They have a tried and trusted model that gets them good terms. Many venture capital companies, including ourselves, actually would look to add a lot of value into the companies that we invest in and manage the risk across those companies. But venture capital is challenged. Liquidity is a big issue. So venture capital companies typically take in high levels of investment, $500,000, $1 million, $5 million, $10 million, and people are essentially locking their money up for 5 to 7 years. And if you're an investor, 5 to 7 years that's a long time. It's given the amount of investment, it's very restricted. So your average investor is essentially shut out of the market. Venture capital companies. So we do seed level investment. Once it goes beyond that, yes, we will invest further, but we have a syndicate network who then take companies through the Series A, Series B rounds. And in the same way that startups are always raising new funds, venture capital companies are always raising new funds to invest. And you know, it's called the J curve of venture investing, and it was once described as a 10-year blind pool. You invest your money over the first 5 years, and over the following 5 years, you harvest the returns. But it's a long-term gig. It takes time. So, putting all that together, what have we learned on blockchain, and how does it impact on venture capital? In fact, it was very obvious. Blockchain allows any illiquid asset to be tokenized. So what we are doing is we are targeting a security token. That's the third piece of that Swiss government definition, and we're launching a security token called COSIMO X. That will be basically a tokenized venture fund. It will be evergreen, meaning that investors can come in and come out of that venture fund. So if you're an investor, what does it mean? It means One, it's liquid. Tokens are liquid. They're traded on exchanges, or there are often other mechanisms to create liquidity in your token. The COSIMO X token will be fully liquid. So people can now invest in a venture fund that is liquid. It's regulated. Again, we're taking the high moral ground on all of this again, and it's fully transparent. Every quarter we issue the net asset value. That will, I'm sure, influence the price of the tokens on the exchanges, and people can make their own decision as to whether they want to buy into the fund or not and get exposure to the companies that we are investing in. So what's changed about our investment strategy? We've been investing successfully in deep tech companies for a number of years. We have a proven model. Why change it? Actually, we're not changing anything. Our model is built on six underlying principles. A lot of it will be shared across other venture capital companies. So it's, you know, we're investing in deep tech companies that are disruptive. We're looking to invest when companies are at a specific value inflection point where we think we will help them get a good return and get a good return ourselves. Clearly looking at teams with depth and, you know, strong, compelling business plans and business models. We still maintain our network of syndicate partners and maintain the discipline and process that is just part of the regular venture capital model. So we will continue to invest in deep tech, so AI, cyber, AR, etc. Where it does vary slightly is when we invest in blockchain companies, because in blockchain companies we now have an option when those companies mature to Series A level. Do you go the Series A route? Do you go the ICO route? And for some of the blockchain companies we invest in, the tokenized model will be appropriate. It's not appropriate for every blockchain company, but it will be appropriate for some. And our investors, as well as getting you know, the regular return on the fund from how the companies perform, are also then able to get a return on any ICO that we do with these companies. So again, opens up another so-called liquidity event, as my US colleagues like to call it. So from an investor perspective, we will be launching COSIMO X over the next few weeks. It's been launched in the US next week, and the sort of people who are looking at it are, and we already have early commitments. So institutional investors, they find a tokenized venture fund attractive because, quite simply, it's liquid. They're not locking up their money for 5 to 7 years. It's very, very transparent, and we're building on the model that we have been using in any case. Cryptocurrency investors actually have shown a high level of interest. There are many out there. I wish I was one who have quite significant crypto holdings and have done quite nicely. Well done. But they're looking for some diversification. They still like the token world, but looking for some diversification and can get exposure to deep tech early stage companies that can yield further return. And for smaller investors, they now have an investment vehicle open to them that was never there before. They were shut out of the venture capital world. Now the regular investor has an option to get involved in the venture capital world through the COSIMO X Evergreen Tokenized Fund. So when we're dealing with startups, we're always looking for startups that are disruptive, as are most VCs. We preach disruption. And when we looked at our own world, the venture capital world, and looked at blockchain, we very quickly have come to the realization that you either disrupt or be disrupted. So we have decided to disrupt ourselves with the COSIMO X Venture Fund. Thank you very much. So that's the end of this session, and we'll be coming back at 3:20 for the next round of speakers. Thank you very much.